Yes, I think, of course, we have had the good experience with Mr. Draghi that was able to solve the previous crisis just by, a few words on his side. I think this time, it's first very interesting to see at what time, the ECB has decided to do this ad hoc meeting to deal with, fragmentation, and they have chosen to do it just before the FOMC. So it probably means to a certain extent that they are afraid that the, Fed would be doing a serious rate hike, something like 75 basis points that we are expecting, and that will somehow have some impact on risky assets in the market, and it will further increase fragmentation in European sovereign bond markets, and I think that's why they decided to do it today.
Stephane, may I very respectfully and in the politest way possible disagree with you? Do you really believe that Monsieur Draghi or Mr. Draghi solved the European debt crisis, or did he take the most almighty swipe with his boot and throw it into the long grass, which we still haven't come out of?
Yes, I don't think he has solved the whole European debt crisis. You're absolutely right about that. But at least he calmed the market without spending any money at a very important, crucial point in time. So in that sense, Mr. Draghi was very effective at that point in time. But you're absolutely right. I don't think the sovereign debt situation of European countries has been solved by that, cheap words that he gave.
So, Stephane, we are where we are when it comes to the central banks and when it comes to this latest announcement from the European Central Bank. Our audience wants to understand how they can take advantage of a lot of this volatility and how they can perhaps also protect portfolios from the ravages of inflation. What advice would you give?
So I think first people need to have a fairly diversified portfolio, and you have potentially some hedges against inflation that you could put in place. The most obvious hedge is to invest in inflation-protected securities. And for example, in the US, the real yield are coming positive to around 0.5%. And we are starting to find this at Lombard Odier, a reasonable level to start to reinvest in inflation-protected securities. We are also advising our clients to, I would say, protect against inflation by investing in a broad set of commodities, including energy commodities, but also including industrial metals. And then as far as the volatility is concerned, I think you have to create a portfolio that have some convexity in terms of risk return. And to do that, we advise to implement option strategies. And we have, since the beginning of the year, just around the time of the invasion of Ukraine by Russia, we have put in place some put spread strategies in our client portfolios in order to protect them on the downside while allowing them to benefit on the upside if there were a recovery between now and year end.